Hi, this is Mark with Right Line Trading, and I want to start off with this quick disclaimer that all signals and trading opportunities that we provide are for educational demonstration purposes only. We take no responsibility for profits or losses that may be incurred by any of our traders. Everyone should understand that trading carries with it substantial risk, and it should be understood that a person can lose a substantial amount of money. Therefore, always carefully consider your financial position prior to trading. And my recommendation is that never trade what you can't afford to lose. Now, there's a lot of good things and a lot of bad things going on with the economy right now. We see that the number of new jobs created for the quarter was quite poor. This is sort of going to restrain the Fed from increasing interest rates, but we also see the government printing an enormous amount of money and looking to increase taxes. So the recipe is there for and the potential for hyperinflation. Now, property rates are going up. Also, as the 30-year fixed is exceedingly low, although it's just crept up just a little bit. Now, in order to hedge your positions to the downside, a really good choice is iShares MSCI USA Momentum Factor and ETF. Now, what this does, it tracks the investment results with a momentum variant index. The fund invests at least 90% of its assets in the component securities of the underlying index and may invest up to 10% of its assets in certain futures, options, and swap contracts. And the index consists of stocks exhibiting relatively high momentum. So when we see this begin to fall, we know that really we're looking at a potential market collapse. Now, you can always short the S&P 500, which is something we've already done. But in order to hedge the portfolio even further, we're going to be looking to short the momentum ETF. As market internals deteriorate and the advanced decline line deteriorates, the number of stocks reaching 52-week highs compared with the number reaching 52-week lows begins to tip in favor of the lows. This index, it will be reflected by this index, and this index is going to make lower lows. You can see it is already making lower lows right here. And it is my anticipation with the short signals, the red multi-time frame assessment and trend, and this break below the C2, the 15 and the 50, and the break of all support, that we have a nice downside with momentum. And we're shorting it all the way down to approximately $145. It's got no downside support. We're going to take it all the way down to 145. So this is going to hedge the long positions in our portfolio and provide us with the level of security we need in order to make sure that we have a balance between a potential collapse and a strong move up. So I'll look carefully at this ETF, ticker M as in Mary, T, U, M as in Mary, as a really nice way to hedge your long positions. Take care, everyone, and I look forward to talking with you tomorrow.